crypto, Ethereum has been my best ever investment from a P&L standpoint by a long way. And I've had some other great trades in my life, and I've had some absolutely terrible ones. My worst investment was not even single investments, because I don't really remember them. It's when in 2009, I overrode my macro framework when my economic indicators were starting to say the recession had bottomed and that the worst of the crisis was over. I overrode it with emotion and said, yeah, but we're going to have a double dip. This is always going to be worse. And so I remained short, and I didn't do what my homework was telling me, all of my macro framework. And that was a mistake I didn't make in 2020. You know, I closed out all of those trades that I put on, the short trades, by end of March, April, almost at the lows. Now, I'm not saying I'm a hero for doing it, but I stuck to my framework. Crypto has been the best single way to teach myself how to do it, because I've got a big picture framework, I've got a long-term risk reward, and I've learned to look at, I've got I've got an hourly chart of Ethereum next to me, and I watch it and I think, oh my God, it's going to roll over, it's going to do, but I disassociate that from my P&L. I don't even look at my P&L. I look at it occasionally when the market's at all-time highs, but I just ignore it, because looking at the P&L makes you think, oh my God, I made and lost this much money today. And that becomes an emotional state of fear or euphoria. But if you're just looking at dispassionate price action, it's different. And I haven't always done that. And it's different with crypto because I don't use leverage. So I don't have to obsess over the price. But in macro, you tend to use a lot of leverage otherwise. And then you have to obsess over the price because you're going to get into deep trouble if it goes against you. So again, crypto's really taught me the joys of long-term investing, which I've always been a long-term investor, without leverage in something volatile enough that gives you high returns. And it's amazing. My structure of how I built my portfolio is I started with Bitcoin, moved into Ethereum, switched most of my Bitcoin into Ethereum. And then I built a basket of alternatives, and I just took an equally weighted basket of like 10 large cap, because I don't know, you know. And then I watched it. I added Solana at some point into that. And didn't do anything else, just left it like that. What's fascinating is my second largest holding now, from an equally weighted basket, second to Ethereum, Sandbox. I haven't bought any. It just went up 20x in the last month and a half, which is crazy. I mean, I would not have my second largest, I would not take that position, the second largest position in Sandbox, but that's where it is. And I'm not rebalancing for the time being. I'm just letting this phase play out and see where these things go. So yes, it's a mix. And so I've got some DeFi protocols, you know, the usual Aave and whatever, you know, stuff like Uniswap. And then I've got stuff like Polkadot, just all the stuff you'd expect. Nothing interesting. It gets interesting because I put Metaverse bets on 6 months ago. Those things exploded, Decentraland and Sandbox. And I have some social token bets with Chili's and Rally. So those are slightly different because they're more macro thematic bets of what I think future things are. Metcalfe's law basically values the network on the number of nodes on the network, and they're basically that number of connections between the nodes. So let's say you're an owner of Bitcoin, which I am. You are highly incentivized to protect the network at all costs. And to spread the gospel of the network. Because the more people join the network, the more the value of the network goes up. But that's behavioral incentive 101. That's behavioral economics. So it's incredibly powerful. So it will always drive people who only see that one thing. Because A, it's given them some return, and they want to defend it at all costs. And we see that it remains tribal because of the element of tokens. If it was a technology and share prices, it's different because you're not part of the network, you're just a passive owner of the shares. But tokenization is different. You're an active owner of a network. We are tribal, and we tend to coalesce in these groups, and we like to organize these groups in certain ways, and this seems to be one of those ways. I have no emotion about does Solana become a larger network. It's a trade-off between centralization and decentralization. The reason the gas fees are so expensive in Ethereum is because it's so popular. So that opens up opportunities for other chains. Do they become a chain that ends up being larger than Ethereum? Who the hell knows? And it doesn't really matter. People take it like it's a personal thing. It's like, do I care whether Google is bigger than Apple or Apple bigger? No. It doesn't matter at this point. I mean, if you can show me the network dying in Ethereum and network growth slowing, then that's a serious issue. If it's not, then it's not. You know, right now it's highly observable that the Ethereum network is growing faster than the Bitcoin network, and Solana and Terra and Avalanche are growing faster than Ethereum, but from a lower base. That's fine. So they're all growing. And you know, the Bitcoin network is growing. So every one of those is growing. And so at this stage, it doesn't matter. This is what makes Metcalfe's law interesting, because you can have a chain like Doge, which has a lot of investors, but not enough use cases. I think it may come because it's such a big chain with so many people on it that why would you not build applications for it? But it's a very lopsided Metcalfe's law, so it should be very volatile in price because once the investors leave, there's no stuff. Ethereum is so deep and so rich an ecosystem with the number of people building on it that it's incredibly powerful. And everybody has to realize is whatever people think the narrative is in Bitcoin about Bitcoin being money, the reality is the medium of exchange in Web 3.0 is ETH. I mean, all NFTs are priced in ETH. Sotheby's are doing art auctions in ETH. DeFi is based in ETH generally. The Metaverse is in ETH. I even commissioned a headquarters for Real Vision in Crypto Voxels. We got a Metaverse architects firm to build it. They charge us an ETH. So ETH is money right now. Does it always remain money? Who knows? But right now, nobody pays each other in Web 3.0 and Bitcoin. Literally nobody. Yeah, I mean, I think it goes over 20,000, and I have done for a long time. And there's a potential for even further because of the staking dynamics and stuff. But my general view is that it goes to 20,000. That was, and I say that with a relative level of confidence. That's just a repeat of what Bitcoin did in 2017. It kind of overlays pretty well. It's not perfect. It was perfect for a while. The charts were like spooky tick for tick. Now they're not, but contextually kind of makes sense for me. It's only a 4x from here. I mean, we've seen Bitcoin do 4x in, or ETH last cycle did, 4x, 5x, 6x in the last month of the year. So who knows? I think the cycle extends anyway. I think it's not going to be the same Bitcoin halving cycle that we've seen. I think it's changed because of the nature of people who are in the market now as well, with the institutions coming in and others. So yeah, I think it goes further and higher than most people imagine.